Obviously, following China's devaluation of its currency, is it stealing growth from other economies? As a follow-up to this and to give us more details is Glenn Ho, Director at KPMG. Glenn, good to have you with us today from our Cape Town studios. I want to pick your brain on two things. As you heard Viv alluding to a conversation and an article that he referred to earlier on today with regard to maybe the future crises that we'll see across the globe might pick up from the likes of China. Your view on this particular matter, and also how this nation has reacted selfishly, if we can use that word, in order to protecting its economic growth?
I think there are a couple of views on the devaluation. Some commentators obviously thinking it's to boost their exports, but some other commentators as well that it's part of a bigger liberalization process for its currency and that it had to take these steps. And obviously we've seen, let's say, some opportunism by some sectors in this devaluation. But I think in the longer term, it's going to be better for the world economy for China to liberalize its currency. But I think it's also going to take quite a long time for it as well to be normalized as such. But I think I agree with Viv that a lot of the future shocks could well be coming from China. But I think they're so intertwined with the American economy as well that one can't really put the blame on one side. But it really is a major play in the world market. That's why it can impact positively and negatively.
Hi, Glenn, Viv here. If the Chinese economy slows down, it's probably likely slowing down at the moment, what do you think about the official growth rates out of the government versus what some of the unofficial commentators are saying about it? What do you believe to be the growth rate likely for 2015 for China?
Officially, it'll probably be exactly on the 7% as they've predicted, or maybe even 6.5. But I think they as well are moving away from these exact figures on GDP growth, because I think a lot of people are skeptical about the numbers. Obviously, some people are saying that it could be as low as 3 to 5%. And I think even the current premier, before he became premier, once said that maybe a good indicator is to look at electricity consumption as a proxy of economic growth. I think it's definitely slowing down, but it's also slowing down in a controlled manner. I think they are trying to get that so-called soft landing, and they will obviously inject capital here and there to try and ensure that it is a soft landing.
How big will the ripple effects be on emerging markets, especially the likes of South Africa?
I think Viv actually said it quite well earlier. I mean, where you've got commodities-based economies, they'll already start feeling it, and we probably might see some tariffs being implemented, etc., for those economies to protect themselves. Interestingly enough, though, we haven't seen any negative comment from the IMF. They've sort of supported these moves. So I think in the bigger scheme of things, in the longer term, it will be better for everyone. There will undoubtedly be some short-term pain in the process, though.
Hi, Glenn. Viv again. I know that one of the things that the government is trying to do at the moment is shift the focus of the economy away from infrastructure, export-based, into more of a consumer-based economy. How's that progress going? I know a few years ago we were talking about the Chinese consumer sector as a proportion of the population being about half the size we are seeing in places like the US and Europe, etc. How quickly is that move going, and how well is it being handled by the government?
I think according to the current 5-year plan that runs to an end at the end of this year, it's gone pretty well in terms of trying to get people to have a better safety net in terms of social security that would then encourage them to spend more as consumers. So we've seen that happen. And probably by October, beginning of the new year, we'll probably get a look at the next 5-year plan, which will also give us an indication of where the government's thinking is going. But there's already signals from government that they want to see more innovation in the economy and in their processes. And I think, as you mentioned earlier, Viv, we'd also have to look at the social fabric as to allow that sort of innovation going forward.
Glenn, though, this clearly does also put developed economies like the US in a unique position where not only do they need to factor in domestic issues, but also the impact of this Chinese devaluation. In your view, what do you think the Fed might consider, especially given the fact that they'll now be importing deflation? And obviously that will work against their justification of an interest rate hike?
Correct. I think a lot of commentators have said that this might have stopped a potential interest rate hike coming up. So that'll be very interesting for all of us to look at. And Also, I think another factor why perhaps this wasn't a a move to shore up exports entirely, is the Chinese president will be meeting the US president next month at a summit in Washington. So that should be make it for an interesting state visit.
Hi, Glenn, again. I think most South African investors want to ask one particular question, and that's about Tencent and what's happening with that company in China. I know we had some results out. They were looking reasonably good, better than places like, for instance, Alibaba, which was disappointing. How vulnerable is Tencent to a downturn in the economy or a change in government policy? For instance, more liberalization you were talking about earlier. If they let more competition from international providers out there to come into the market, how vulnerable is a company like Tencent to that?
Just from what I've seen, Viv, it seems to be that they're also diversifying a bit in their service offering. I think just today it's been announced that they and Alibaba will be embarking on a joint venture. So that's interesting to see that those two big e-commerce giants actually working together in that market. But I think online sales is very big in China. There's been a liberalization of gaming and things like that in China. So that could all be areas that they'll be looking at to grow their market going forward.
Glenn, thank you so much for your time this evening and for joining us on your analysis on all things to do with China. That was Glenn Ho, Director at KPMG.